We saw the ripple effects from Monday's move, and your average fee now is just 7 basis points across your lineup. The industry average, for context, 44 basis points. Set the scene for us. Why now?
Well, you know, in one sense, I will say Monday was a pretty joyous day here at Vanguard. And it was joyous because it really is a reaffirmation of our business model. We're owned by our clients. And so as a result, as we gain scale economies here at the company, we share those back with our clients. And that's not just been true since Monday. It's been true since 1975, since when we founded the company. And so this was continuing on a 2,000 price cuts, I think, by our tally as of last week. Now it's 2,168 price cuts. And that's been part of the proposition that investors have had with Vanguard for decades.
And so, Salim, I think I'm asking on part of your competitors, but also investors as well, when I ask, how low can fees go? You're at 7 basis points right now. Where is the possible floor here?
Well, you know, we don't price products as loss leaders. We're not looking to, you know, price abnormally low in order to get somebody into a higher cost other service. And so we really look at it across the board in terms of our scale economies. We want to deliver great quality and great performance. And I think that the thing that sometimes gets lost in the mix, obviously, index prices have been coming down for quite some time. Led by us over the past several decades. But sometimes it gets confused that we're all about index. We're actually about active and index. And really, if you go back to our origins, what Bogle was against was high fees. And so active management at a low fee can really outperform over the long term if delivered with the right quality. That was Bogle's hypothesis in the 70s and 80s. And if you look at our track record, even just in something like active fixed income, the empirical evidence backs up that hypothesis that he had way back then. 91% of our active fixed income outperforms its peers over the past 10 years. And one of the reasons why is because we price it at just over 10 basis points. And so at a very low fee. And, you know, when you speak to our fixed income team, to Sarah Devereaux, our CIO, and our teams who run our active fixed income, part of the reason they're able to outperform is they have a much lower headwind from higher fees, and so they're able to take risks in a much better and more disciplined way. And so what this is really about is not just about delivering high-quality index management, but it's really about delivering high-quality investment management at a very low fee. And I think whether you're looking at active fixed income or whether you're looking at index fixed income or index equities, that's really what we've been about.
Right. Well, Salim, you make the point that a lot of people probably think of Vanguard and they don't think of active. And you do have, of course, active funds out there, but it's a pretty small percentage of your overall lineup, especially if you take a look at the ETF side of things. Should we expect to see more active fund launches from you?
Yeah, you know, our active management, the first Vanguard funds were actually active funds, if you go back to the 70s. And both we manage our active fixed income within Vanguard. We have a whole range of partners, sub-advisors that we work with for our fundamental active equities. And they're unified by the principle of being high quality at a low price. And yeah, Katie, you already have seen us doing a lot more in active ETFs. And I think you've seen that pick up over the past several months, and I hope and expect that that will continue over the next, this year and next year.
All right, so we'll keep an eye out for that. You were talking a little bit about, of course, how the ownership structure works at Vanguard, how basically a lot of the extra cash, the extra assets that you generate are funneled towards these fee cuts. But I'm curious, from where you sit, how do you balance lowering fees versus investing in the business? What does that decision tree look like?
Yeah, it's something we do very carefully here. This week is all about our fee cuts and giving back to our clients in the form of lower fees. We've also stepped up our investments in things like technology. That's something that really began about 2-3 years ago and is continuing this year and next year. Because we're always trying to balance making sure that we've got high quality products at a low cost And we're delivering the right level of service to clients. We're investing in newer technologies to make our investing even more efficient, to make our client interfaces even more efficient. So that's always a balancing act here at Vanguard, just like it is at many companies, in terms of how do we think for the near term and how do we think for the medium to longer term. But I'd say one of the beauties of Vanguard, I think it's part of the original genius of Vanguard, is that when we've got a surplus after we've looked at the important investments we need to make back in things like technology, the way we give back to our owners is through lower fees.
Right.
And I think that's the Vanguard effect that you've been seeing for decades all across the company.
Yeah, that Vanguard effect, obviously a good news story for your investors, maybe not for your competitors, but I do want to talk about the future, and I want to talk specifically about private markets and alts. One of the big take stories that we have on the terminal right now is about PIMCO and fears that PIMCO might be falling behind in alts, because you take a look at the industry right now and a lot of your peers have invested heavily in alts, in privates to scale up there. What is your plan when it comes to those areas, and do you fear that you're a little bit behind right now?
Well, one of the great benefits of our business model, if you go back to the origin, we had sub-advisors. For example, at our beginning, we are and are still sub-advised by Wellington Management, which is still our largest sub-advisor today. And so where we don't have capabilities within kind of Vanguard, we've long had an ability to partner with other firms. To date, we've generally done that in fundamental active equities, but we can do it in things like private markets. And there's lots of discussions and explorations we have underway to see what's possible. But our North Star is always about what's right for our clients. And it's making sure that whatever it is we do in active, in index, ourselves, or with others, that we keep in mind that we're about simplicity, we're about low cost, and we're about long-term returns. And I think that there are constructs that will allow private markets to fit in that. But that's really part of the exploration that we're doing, because whatever it is we do, we want to do it the Vanguard way. And we want to do it in a way that's well suited to our client base, which is really looking to us for a certain set of things that we've consistently delivered over the years.